Hi, and welcome to another edition of Street Smart Options here on YouTube. Folks, if you're watching us on the YouTube channel, go ahead and take a look at our subscription model there. If you'd like to subscribe with us, we'd really appreciate your patronage. Jonathan's going to be talking about a new different stock set tonight, something that he highlighted back in January of this year, and it's been in a lot of news channels. I know I personally heard about it on one of the big news shows like 60 Minutes. Jonathan, it's a biotech stock, and I know that's not completely inside of the realm of what a lot of people will trade just from lack of information, but you've done quite a bit of research. You know a bit about it. If you take us through that, I'd appreciate it.
Yeah, well, our approach to finding stocks starts with the technical. We look at the charts and we find stocks that have set up, look like they're going to make a big move just from the action in the price and the volume of the chart. And so CRISPR came out of that research back in January of this year. It made a new high on increasing volume, and we highlighted it on in our Facebook group. And here's a chart that we posted in the group. And the stock emerged out of a flat base pattern here. It's actually like this long, maybe you could say it's a kind of a cup and handle, or just this basing action that lasted for a good part of a year. 2017, all of 2017, emerged in December, and then it had this huge volume spike on this breakout, right? And then you'd expect it, you'd think this is a little bit late, right? It's already moved from this point. It's already moved from 21 to 28, right? So the thing's up almost 40%. But this stock, so it corrected down on this fourth week of the breakout. It was like one, two, three, fourth week of the breakout. But then it like closed the week at the high of the week. On very powerful, very powerful. It retraced the previous week, and then it blasted up and almost made a new high on the fourth week. And so it was like a reversal week. The stock was so strong as reversal week, and that's when we got involved in it, because it was just overwhelming power. It looked like this thing was going to really shoot up. It wasn't going to pause. So I mean, ideally, best right would have been to get in when this thing got over around the 21 level, right, in the very first week here. But in this case, we're on week 4 of this move. It corrected, but it didn't really pause. So it actually worked out quite well for us, this particular stock. And I'll get into the company a little bit more in a second. But if we fast forward to today, which is July of 2018, you can see back here in in January is when we talked about the stock, and this was at 27.5, and it subsequently, the following week went up to 42.5, had this like short 2-week correction, and we took profits here in the 44 area when this thing started to reverse, 43, and because it was just a straight up move, right? And that was just a big percentage. It was a 50% move within a week, so we took some profits on that. But this stock just paused on light volume here, and maybe I can move this chart down a little bit so we can see the volume. There we are. And it's just this is a pausing action, and then it demonstrated strength again on, and we didn't talk about it later on in the group, but there was opportunities to get back in this thing again on this reversal day. And this thing, it made it up all the way up to 74 recently, and now it's consolidating again. So it was a huge move. It went from when we first talked about it, around 27-ish, all the way up to 74 within a few months. It was a big move, and something that this came out of technical research, looking at the stock chart, and then doing a little bit of fundamental research on the company too. This company has a pioneering technology called CRISPR, and one of the founders of the company is the inventor of this technology, and it is a technology that enables the company to edit cells from a patient, actually extract cells from a patient, edit the cells genetically, and then reintroduce the new cells, the treated cells, back to the patient to treat their diseases. And so the first product that they have, I should say the first drug in their pipeline, is to treat sickle cell anemia. And they have other pipeline products for treating blood diseases as well. So it's a pioneering company. It's well known, and as Jim mentioned, it actually has hit the main news outlets because it is such a pioneering technology. And CRISPR is being used now by other companies and universities because it's such a great technology. If you look at the pipeline, you can see that it's a development stage company, so they wouldn't expect them to have much in the way of revenue, and certainly nothing in the way of earnings at this point, right? They're in phase 1, phase 2 of their development pipeline, right? But they have several things in the pipeline, and of course this incredible technology that they own. And they're treating sickle cell disease with their first product, and it's drug disease known as beta thalassemia. And so they're also involved in cancer research and immunodeficiency research. So they're in a lot of different hemophilia. So they're in a lot of different areas. Now they have some strong partnerships. Not only are they financing themselves through the stock market, these companies also finance themselves with partnerships with pharmaceutical companies. So Vertex is a major partner in their company. And so they also formed a entity called Casabia with Bayer, and so they're doing research and being financed from this Casabia joint venture entity. So they're a fascinating company, pioneer, and so this kind of company would attract institutional money for sure, even though they're not a profitable company. And the institutional investors that invest in these kind of companies, the mutual funds, the private money managers, they don't expect these companies to be profitable. They're just looking for something that's pioneering, that could be big in the distance, right? That they're going to be able to get financing money to pay for their research and that kind of thing. So in this case, 2017, they had $41 million in reported revenue. Now that would have been partnership revenue. That would have been like maybe royalty payments on milestones achieved by their joint partners, things like that, right? It wouldn't have been it wouldn't have been sale products, although they might have some license revenue mixed in there because they are licensing some of their technology. But of course they've had this huge, R&D expense. It's not even reflected. It's funny in this in this operating expense line. It's not reflected for some reason, but for sure, total operating expenses includes a big part of its R&D and development and clinical research and all that kind of stuff. So real expensive. It's really expensive to be a biotech company, and so you really need to have some pioneering technology so that you can get the pharmaceutical joint ventures and grants and things like that to fund your research. But the bottom line with these kind of companies is that you don't have to know a whole lot about their technology to make a trade out of the company, right? We start with the chart. In this case, we started over here, right? We started with a chart with good price volume action. And then we looked at the company, said, hey, this is a pioneer in the area. It's going to attract institutional money, and the volume is surging in, right? So this is institutional money surging in on the chart. So you can take advantage of it, but understand there's also, risk in these biotechs, right? Because a bad news event during their research or during their clinical work, like maybe a premature death or something like that, or some bad effects from their drugs, and their stock could really head south pretty quick. So it's a good stock to trade using options, and so that's our preferred method for trading these stocks, is with options, because your risk is limited to the value of the option you purchase in case there's an adverse news event. In this case, it worked out really well, and based on the chart, based on technicals, it looked like it was going to be a good play. And we just, it was a quick 50% in the stock move just in 1 week, and then continued to move higher. So that's really the wrap on Crispr Therapeutics.
Fantastic, Jonathan. Thanks for that. So, folks, if you're looking for information, and especially if you appreciate the information that we give out in these free videos, do yourself a favor and take a look at us on streetsmartoptions.com. Also, take a look at our Facebook group, which you can find at facebook.com/groups/Street Smart Options, because it's not all about just the standard ways to make money by trading options. There's also other moves that we look at, and obviously, biotech is something that not everyone is versed enough to be able to look into on their own. So it's obviously great to have an expert like Jonathan that can point you in the right direction and give you some good information so you can make the decisions on your own on what you'll trade and what you won't. We thank you for your time and have a great night.